Hello, everyone. I welcome you today to this podcast. My name is Dr. Simon Ugu. I'm the Executive Director and Chief Operating Officer of AG Mortgage Bank PLC. And AG Mortgage Bank PLC is headquartered in Ikeja, Lagos, Nigeria. I'm here today to talk about understanding mortgage, particularly in Nigeria. How does mortgage work in our clime, and how is mortgage different from every other kind of loans? What is a mortgage? A mortgage is a facility, a loan you take to buy a property. And that property could be residential property or commercial property. But the good thing about a mortgage is that it is a self-collateralized facility. You don't need to bring collateral from any other system, any other property to collateralize the property that you are taking a facility to buy. So that property that you want to buy collateralizes itself. And that is why we call it a mortgage. Again, what is the other item and characteristics that makes it a mortgage? It allows for equal installment payment over a long period of time. I had to emphasize that word equal, installment, and long, because that is what it is. You will be paying what we call monthly rental, quarterly rental, or as agreed with your mortgagor. And what you pay is over a long period of time. So it's quite different from every other kind of loan that are short term. And it's quite different from every other kind of loans that you may need to bring other kind of collateral, like all asset debenture, bonds, and the rest of them to collateralize them. This one, that property that is being financed for you is what you use in collateralizing it. And then you pay the rental or the monthly repayment according to an amortized schedule over a period of time. And when we use the word amortized schedule, what are we talking about? Amortized schedule is a system in which the principal and the interest is computed, and you will be repaying the principal on a reducing balance. But it is arranged in such a way that the principal is reducing, the interest element you're also paying is reducing. But if you equate both the principal and the interest on a monthly basis over the period of repayment of the loan, they are of equal payment status. So if your loan officer appraises you and say you will be paying 90,000 naira every month, in that 90,000 there is an element that is the principal, there is a component that is the interest, and per time the principal that you are paying will be reducing, because you'll be paying a higher amount of principal as the loan progresses, and you'll be paying a lower amount of interest as the loan progresses. That is the way amortization works. We'll take another section, we'll deal with the issues and demystification or simplification of loan amortization process, particularly as it affects mortgage. But this is done in such a way that the burden of repayment over the period of 10 years, 5 years, or 5 years, 10 years, or 20 years is not increasing. Your income may be increasing, but your repayment is kept static, fixed over that period. And that is what mortgage is. That is the basic principles and tenets on which mortgage operations and mortgage system is built in Nigeria. All right, haven't explained what mortgage is and how mortgage operates. We have some questions already popping in. And I think this represents some of the frequently asked questions around mortgage and why Nigerians are scared about taking advantage of the mortgage offering in our clime. One of it is, how is mortgage actually different from every other loans? Mortgage is different from every other loan because, number one, like I told you, is long term, 10 years, 5 years in some cases, 15 years, 20 years, and we have a system that's administered by some other agencies that run up to as far as 30 years. But majorly we benchmark it 60 minus your current age in order to determine your tenure. So whatever age you have residual to 60 becomes your available tenure. That is how mortgage runs. Sometimes also we have fixed interest rate. We also have mortgage in Nigeria running at single-digit interest rates, which you don't get in many places. And in other form of loan. So mortgage is quite interesting, and there's no reason why Nigerians should shy away from taking the offerings that are available in the mortgage market. How long does it usually take to process a mortgage in Nigeria? Interesting. This is actually interesting. Okay, so recently we have a mortgage product that can be processed in less than a week in Nigeria. You might say, how? Yeah, so the Mofi Real Estate Investment Fund, called MRIF, very efficient, very efficient mortgage intervention fund. That fund is available up to the tune of 100 million at an interest rate of 9.75%. I have processed that loan in our bank, AG Mortgage Bank, in less than a week, sometimes 72 hours, other times 1 week. If it delays, maximum of 2 weeks, the MRIF loan is out. If you doubt me, give us a try. You will realize that it's efficient. The Federal Mortgage Bank of Nigeria loan is also there. When you document properly, the board of the Federal Mortgage Bank of Nigeria meet on a quarterly basis, and you can be rest assured that you will get disbursement or you get approval from the Federal Mortgage Bank on a quarterly basis. That's a period of 90 days. And it's also very efficient. It's been one of the most stable mortgage process in Nigeria ever since its inception, following the Decree 2 of 1992. And it's been on ground, and it's been very efficient at a single interest rate of 6%. We also are very proficient at processing that facility in Nigeria. And of late, the Family Home Funds is there, that very fast, another very efficient system. And when you talk about our own in-house loan also, our turnaround time for processing a mortgage in AG Mortgage Bank, if all documents are in place, all due diligences are done, should not and has not and will not exceed 30 days. 30 days turnaround time, and we get those out and put offer letters in your hand. Then the rest is up to you, the subscriber or the applicant, to meet the conditions precedent to drawing on the funds and taking ownership of your property. We will deal with that much later, deeper, maybe when I see more questions. If you need clarity on how that works, I will still speak into that. What documents are required to apply for a mortgage? Fantastic question. Very interesting question. This is where the problem comes from. Mortgage does not work in Nigeria. Starts and ends with documentation. If you document right, you will get it right. If you document well, you will get it well. If you document promptly, you will get the disbursement also promptly. There's no two ways about it. So let's start from the very foundation, the cradle of all of it. It is the root title. Ensure that you have your root title right. Most persons go into buying properties that they have not engaged professionals in doing due diligence on the root title. And fundamentally, that's where the problem comes from. So you're buying a property that does not have a governor's consent in a city like Lagos. You're buying a property in a place like FCT Abuja where it does not have FCT, R of O, or C of O. You're bringing AMAC title, you're bringing Buhari Area Council title, you're bringing customary title. It will not fly. So you cannot bring title that are deficient, weak, or not registrable and not transferable and expect that the mortgage process will scale through. It doesn't happen that way. So your documentation starts with your root title. And the most reliable root title is a CFO and an RFO or a governor's consent in some places. So we need to get that right. Then after that, you get an offer letter on the property that you want to buy, and you will have to accept that offer, because offer and acceptance binds a contract. When you take an offer, you accept the offer, the contract is binded, and then there is a transfer of consideration. The consideration we're talking about is your equity, your personal stake in the mortgage process. You need to put down something. Lately, the Federal Mortgage Bank had reduced it to a 10% for a certain class of loan. We also are saying, look, you can do a minimum of 10%, and you can also do 20% and 30%, but it depends on the class of mortgage and the volume that you want to take. So we have all of that available. Then you give us each document, like your evidence of cash flow. You give us evidence of rentability, or if you're a business person, the business that you do. Just prove to us that you have the capacity to do them, and then prove to us that your age is within the allowable and permissible tenure age brackets that a mortgage facility can be taken on by giving us evidence of your age, declaration or birth certificate. These are some of the basic documents. Once we have them, we process your mortgage. And what are the interest rate like and what affects them? I mean, we've spoken to various interest rates, CADA. We have interest rate as low as 6% from the Federal Mortgage Bank of Nigeria. We have interest rate as low as 9.75% from MREF. We have blended interest rate that could even be between 6% and 9% from the Family Home Funds and MREF fund, which when you blend it may come to about 7.7%. And we also have interest rate as much as 30%, 32%. So, I mean, those are the ones that have been up to 30% and 32% are a function of money market rates. And so those are the various determinants of rate. But when you come, you will have various and different bouquet of mortgage products, and each of them have their own peculiarities and benefits, and then you can make choices, and whatever choice you make, we will go with it. The last question here is, how can people improve their chances of getting approval? Your chances of getting approval, if you will ask me, is entirely up to you. Document right. Document right. Seek professional advice. Get the right property. Come to a mortgage bank. Get a mortgage advisor. Come to AG Mortgage Bank. We will advise you right, and we will get you to document right. And once you document right, your chances of getting approval is 100. I promise you. Thank you.